they witnessed a bit of a slowdown in the past quarter in IT hiring with around 33% growth in comparison to around 50% that we're seeing in the prior 4 quarters. Also, there was a loss of around 84 crores odd. That compares with the profit of around 170 crores in the previous quarter. The margins improved, which is positive, but that's because ad spends did decline. So plenty to discuss. And to help us out with that is, we're joined by Hitesh Oberoi, the CEO and MD of the company. Hi, Hitesh. Good morning. Well, yesterday the market gave its verdict, right, in terms of the numbers. The stock was under pressure, but plenty to clarify on. So good to have you this morning. Now, recruitment revenue was up by close to around 40% on a year-on-year basis. A couple of brokerages like Motilal Oswal, they're expecting a flattish recruitment revenue number for Q4. Do you agree, or do you believe there'll still be growth on the base that we saw last year?
Well, our billing growth has slowed down. So billing is a forward-looking number compared to revenue.
Yes.
Revenue growth was still solid in Q3. Recruitment revenue grew by 40%, but billing revenue growth declined to 17%.
Yes.
And like I said in our comments, this is partly because we are seeing a slowdown in IT hiring. And IT hiring is about 50% of our business. The non-IT market continues to be on fire. The IT market was super hot for the last couple of years. In fact, our revenue from IT clients must have more than doubled, maybe even tripled over the last 2 years. But because we are seeing a slowdown in the US, that's sort of having an impact on the Indian market or on the sentiment here. And, IT hiring is a little slow. Now, in the past, what we have seen is that whenever there is a slowdown in the US, for a while, the Indian IT companies also get impacted. But in the long run, what happens is India is actually the solution, because if the US companies want to cut costs, what do they end up doing? They end up outsourcing more jobs to India. So we expect this market to pick up, going forward, because India is a solution. India is not the problem.
Okay, all right. But Hitesh, what about the growth? I mean, let's get back to the point. Last year, I think the recruitment revenue in the fourth quarter was around 350 crores approximately. Will you grow on that pace, putting together everything that you said? The non-IT part of the business is on fire, IT is under some pressure. We'll see how that plays out. So will there be growth or not?
Well, it's hard for me to say what will happen in Q4. Things are.
Will there be degrowth?
I don't know. We could grow. We have an internal target to grow, right? But whether we'll end up meeting that target or not, I do not know. So billing growth will continue to be under pressure is all I can say. But revenue, revenue may still grow because, there's a lag effect of revenue growth. So it's up to me to say what shape or form things will take going forward. It's a changing market. The non-IT market is about 50% of our business. That continues to be strong.
Hitesh, good morning. You gave us an example of, eventually things will pick up because, India is the solution, as you said. So just going back and taking the help of history, how long do these cycles last? When you get into a slower patch, is there any way to kind of, and where are we if there is a framework to kind of understand this?
See, we've been through 3 big recessions. There was a big recession in 2001, and then there was the global financial crisis in 2008, and then there was COVID. And even during these tough times, these are big recessions. They were not mild recessions. The US is not even in recession as we speak right now, right? Yeah. Even during these times, business slowed down, but only for 3 quarters, not more than that. So, maybe what has happened right now is that IT companies have overhired. They were unable to predict demand because there was a huge surge in digitalization during COVID. And post-COVID, people have started venturing out. Things have slowed down a bit. And they're waiting for things to go back to normal. So I think it's only a matter of time before things start picking up again. It's not as if Indian companies are laying off people. You may be seeing a few layoffs in startups, but we don't do a lot of we don't make revenue from startups. And let me tell you, there are 1,400 captives in India. So it's not just about servicing IT services companies anymore. There are 1,400 global captives in India, and many of them are still adding people as we speak.
Okay. I have a couple of questions, and I take your caution on board. You're talking about a slowdown in tech hiring, the billing growth is under pressure. Do you see a funding winter coming as well? Because that's the other, big question, right? Private equity, angel investors are looking to perhaps slow down on investing in 2023. Is that the feedback that you're getting from the investee companies?
Well, the funding winter has been here for a while, so we're already in the middle of it. And but see, it's not difficult to raise money if you're a small startup. So if you want to raise 1 million, 2 million, 5 million, there are enough sort of people out there who are willing to fund you. I think what is becoming difficult is if you're a loss-making company, and if you've been a loss-making company for a long time, and you want to still raise 100, 200, $500 million, that I think is not going to be easy going forward.
Okay. The other question I had was on 99acres.com because, you know, I mean, it's been almost, what, 20 years since you've launched that portal, right? You launched way back in 2005. It continues to be loss-making, whether the real estate market recovers or not. I just want to understand what's happening here. At any point, do you hope to turn profitable with 99 acres?
Well, you see, the real estate market was actually in deep trouble for almost a decade. You know, after the global financial crisis and, you know, because of demonetization, GST, RERA, the NBFC crisis, COVID, you know, the market was actually in deep trouble for a long time. We kept growing even during these times, and we kept our burn low. In fact, we have invested a total of just $50 million into this business. So it's not as if we have burned a lot of money in our real estate business. I mean, so it's chump change to what startups sort of spend nowadays. Now, what we are seeing after a long time is that, you know, the real estate market is back, you know, and after a long time, transactions are moving up, prices are moving up, the unsold inventory has gone down, real estate developers are launching new projects. So we expect the market to continue to sort of do well for some time going forward.
The market may do well, Hitesh, but are you expecting to turn profitable in this year in that business?
We don't have a profitability goal. We have a growth target. We want to continue to be a strong player in this market. See, profitability, you know, there is a lot of competition. In fact, competition has intensified in real estate over the last 2-3 years. There are new well-funded startups. There are international players who are active in the Indian market. And they're active because they see a big opportunity. I don't think this is a time for us to sort of, you know, focus on cost or profitability. I think this is the time for us to focus on growth. Of course, we will be careful in how we spend our money. That's how we've always been.
Okay. All right, Hitesh, final question before we let you go. You know, what happened in 4B Network? There's a write-off out there. Is there a risk to any more write-offs in some of those investee companies? If you could give us that. We're running a little short on time, so crisp answer.
You see, what happened in 4B is unfortunate. It was a good idea. We backed the team. For a while, there was good traction, which is why we put in more money. But unfortunately, the market turned. The company was not able to cut burn fast enough, and they were unable to raise new money. And that's why our auditors have told us to sort of impair that investment. So that's what has happened is unfortunate. Now, see, we've invested in over 50, 60 startups. Not all of them are going to work. It's a portfolio approach. Some of them will do really well. Some will hit the ball out of the park. Some are bound to fail. And in the end, of course, on the whole portfolio, if you do well, I think we should be fine.
All right, fair enough. Any of those investments in AI-related companies? That's a new hot buzzword, right? By the way, do you think a lot of it is hype? We will get over it? We've gone through so many of these hype cycles, right? I mean, just last year it was metaverse. You know, we got over it very fast. Yeah,
no. So AI piece. See, we've been investing as a company in AI for the last 5 years now. We have built a very high-quality AI team, and that's a very core part of our, you know, overall strategy, especially in the recruitment business, and increasingly in the other verticals as well. With ChatGPT, what we are seeing is something very, very different and unique. Because see, normally when you have a big technology, you always have a big company which emerges you know, on the back of that technology. You know, could ChatGPT be that company? It could be. But some of them, you know, like I was talking to 1 or 2 people in our company, they're spending 25-30% of their time on ChatGPT now, right? Yeah. So there is something out there.
I'm sure a lot of us are. A lot of fun.
Prashant is just asking so that, you know, whether he wants to know whether our jobs are safe.
Secure or not.
Are our jobs safe? Or
I hope not, because if you're not, you know, if I hope, you know, people, you know, see, in the end, what will happen is it will create new opportunities and it will create new jobs. But yes, people will have to skill themselves. They will have to adapt to new
train. Yeah.
We are in the non-IT part of the business. It's on fire. We're going to do well.
All right, Hitesh, great to have you with us here. Thank you very much. Appreciate your time here as always. Great conversation. We'll take a quick break here. Back. Deepan, of course, is still with us, but Sudarshan and Mitesh also join in for quick technical checks in just a bit. Stay with us.